Welcome to Doc 9 Tech Talks, our regular series discussing all things fintech with the leaders and visionaries driving digital change in the financial world. In this episode, our MD, Mark Lusted, is joined by Maria Harris, formerly Director of Intermediary Lending at Atom Bank, and now an independent consultant and non-executive director.
Good morning, everyone. Welcome to episode 4 of Doc 9 Tech Talks. I'm delighted to be joined today by Maria Harris. Maria was formerly Director of Intermediary Mortgage Lending at Atom Bank and helped spearhead the launch of the first fully digital mortgage. And Maria is now an independent non-exec and consultant. So Maria, firstly, thank you for your time this morning. How's things?
Yeah, pretty good. Thank you. How are you?
Yeah, pretty good, pretty busy. But yeah, so in terms of obviously, I think we last spoke before lockdown, before COVID, etc. I guess we'll touch on that very briefly. How's things been from your side? Working from home and adapting to this new world.
Yeah, I'm hoping like everyone else, most of the time I've felt pretty upbeat and pretty positive.
Yeah.
And coping really well. Feeling really thankful that my friends, my family are all safe and well, and touch wood, nobody close to me has had any kind of major impact, which has been hugely thankful for. But then I have days where I completely wobble and I'm like, this is really overwhelming and it's a real effort to get dressed, and you're a bit like just a bit bewildered by the whole thing, especially when you see that whatever comes out of this isn't going to be normal. We're going to have a new normal, and that's quite hard to wrap your head around, not knowing what the future's going to look like. So yeah, odd wobble days, but overwhelming pretty good. I'm actually really lucky because where I live, just outside of Newcastle in the northeast, so I'm on the border of County Durham, so I've got all these like amazing forests and walks and castles and stuff right on my doorstep, which has been great. The weather's been fabulous, which has helped. But normally I work in London, so I'm normally away 3 or 4 days a week, and I'm really missing not being in London and not having that face-to-face engagement and interaction that I would normally have. So yeah, working from home is great. It's been lovely to be home, but yeah, I'm missing my human connection.
Yes, I think Zoom is really useful for seeing people's faces, but hopefully in the coming months we'll come back to some form of normality. So for those that aren't in the mortgage industry, would it be worth you giving a quick intro to your work at Atom and your kind of role launching their first digital mortgage journey?
Yeah, that was just the craziest and best thing I'll probably ever do in my life. It was such a huge opportunity. So to be the first UK bank from scratch in however many, almost 100 years, and to be the UK's first fully digital bank built entirely on an app. Like, you only ever get to do that once. It was just like a phenomenal thing to be involved in. And Mark, my chief exec, was just amazing. He was like, here's a blank sheet of paper, design the mortgage journey that you want to have, take out all of the things that have bugged you for the last 10 years in your life and financial services, and build what you want to build, because you'll only get the chance to do this once. So I got to design this end-to-end mortgage journey entirely from scratch, using brand new tech, using biometrics, using new platforms, finding providers to do stuff differently and challenging them to think differently and work in a different way. And it was just, amazing thing to build. And it was so successful, and it is so successful. I think in our first year, we did over 1 billion in completions, which is amazing. Fastest growing UK bank, the first 2 years that it launched. We broke every record that we could find to break. We did mortgage application to full offer in 14 seconds, which just changed the industry. And the customer experience, which was what it was all designed around, is phenomenal. I think it's still the highest rated bank on Review and Trustpilot. It's got like a 97% recommendation rate, which is just unheard of for a bank. Banks just don't have NPS like that. So to disrupt the market and change customer experience forever, who wouldn't love doing that? It's an amazing thing to do.
Cool. So do you want to talk us through a bit of the process? So that, I think it was around sort of 4 years ago you were working on that originally. So do you want to talk us a bit about how you built out these platforms and any particular technologies you used or lessons learned that you could share?
Yeah, so there's two very different journeys that happen at the same time. So for the intermediary, intermediaries weren't quite ready to go down an app-based journey. We did a lot of research early on and a lot of testing with brokers, but they're so used to having a portal, and a portal's kind of where they start their journey. So we built a portal-based journey for the intermediary, and then an app-based journey for the customer. But what we did is we tied the two together, so the journey actually works in parallel. So while the intermediary is keying the customer's application, all of the APIs are actually firing in the background right from the beginning, right from the minute they put the customer's name in. It's calling all the different services, it's setting the customer up on the app, it's setting up their security, their credentials, everything. So by the time the broker gets to the point where they say, submit a DIP to see whether or not you would lend to this customer, as soon as that response comes back yes, which is instant, all real time, all API driven, the customer gets an invite to their app. Their account's already set up, and they've set up their biometrics, and they get their password to log in, and they're in, and they can see everything that the broker's already keyed. So the customer gets this really lovely, reassuring visual experience that you wouldn't normally get with a mortgage. Mortgages are normally quite, a lot of it's quite opaque and behind the scenes, whereas this was all about transparency and speed, and just taking all of those horrible moments out where customers are really anxious and nervous and don't know what's happening and don't know what's going to happen. So the whole journey is just built around that concept of transparency, real time, every single call is real time, and instant decision, and every touch point, the intermediary and the customer and anybody else in the journey, so whether it's the valuer, conveyancer, whoever, all get the same information at the same time in real time. So if you get a valuation document back, it drops into the customer's vault, the broker gets a copy and the conveyancer gets a copy. So you just take out so much of the pain that's in the journey. So yeah, really good. And partners were brilliant to work with, but really pushing them to do that real time when they've not done it before, and to share when they've not shared before.
Yes. I guess in terms of, if we look at the mortgage journey itself, it's fundamentally not, it's, I think it'd be fair to say it's a few years behind others in terms of technology. If you look at the whole market, fundamentally the journey has not changed hugely over the last kind of 10 years. If you look at the whole market, and there's an optimum journey that, and there's obvious things I guess that people would look to kind of speed up in this process. Not having to send paper ID, and not having to send paper statements, etc. So I did a few years ago to remortgage, and I got a pack in the post which I had to fill out and then certified copies and send it back, and that was it's a bit of an eye opener, I guess, when you compare to other sectors. So obviously Atom had a slight advantage or big advantage, that you didn't have legacy platforms or existing tech to kind of to work around. Did you? I mean, perhaps you could talk about that. So did you guys build out completely new systems, or did you plug in existing technology from existing providers? How did you create such a different journey?
So we did both. There's various layers to the tech. So the front end, which is the customer app, the broker portal, all the stuff around the engagement, interaction, all the real touchy-feely stuff that the customer kind of really experiences, all of that is designed and built in-house and owned in-house, and is tech that we built from scratch. Okay. And we brought our own engineers in, our own coders, our own UX, our own design, everything. So all of the front end is entirely in-house. And that's what makes it uniquely Atom's experience, and actually really difficult to replicate. We have middleware, and we use MuleSoft for our middleware. We have MuleSoft engineers who work in-house. So all of our APIs and all of our calls and all of our integrations to third parties all go through the middleware layer. And then all of the stuff at the back end is predominantly plug and play. So we partnered with Iris for sales and origination, with Phoebus for servicing, with Call Credit for decisioning, and with Leon for biometrics, and all of those third parties all integrate at the back end.
Interesting. Okay, so actually, when you look at that, fundamentally, you've taken existing technology or existing platforms and utilizing some new things like biometrics. But I guess what you've done is, when you piece that together as a whole, it's a sum of more of its parts in terms of user experience. So you weren't building everything from scratch then, but
most banks would be crazy to try and build a whole bank from scratch. It's a big old undertaking.
Yes, yeah. So I guess that's also an interesting point if you think about digital ID and biometrics, and even things like ABMs and open banking, etc. That actually a lot of this technology and these features are actually available for companies to use at fairly low cost, actually. Think of something like digital ID. It can cost like less than $1 per lookup if you plug in something on Fido or similar platforms. I do sometimes wonder why these technologies aren't more used in the sector. Do you think that's kind of I mean, what reasons do you think the sector is sort of slightly behind others in terms of adoption?
Yeah, so it probably comes back to your earlier point about the fact that the industry's actually not changed for a long time. And actually the process of buying a house and getting a mortgage probably hasn't changed since the 30s. And I think the only kind of real innovation, like really, really different, was when AVMs came in, which was kind of, 15 years ago. And we've not really had anything new until open banking's come along. So the actual, if you mapped out the process that you went through for your remortgage and where you start and all the different components, like that chain hasn't changed at all. And the order of that chain's always been wrong.
Yeah.
But it's developed organically, and all we've done through innovation is take out what was face-to-face or paper,
yes,
and made it machine-led. We haven't actually changed the journey, which I find quite bewildering. And I think that, there's a point where that's going to flip. So things like having ID would require the customer to be in control of the ID, and for the ID to actually be done upfront and validated, so it can then be shared with all of the parties. Whereas at the minute, all of the component parts are done in isolation and in silo. So as a customer, you end up doing your ID and V 3 or 4 times.
Yeah.
And so until COVID, actually, we've been so reliant on. We think that it's less risk to have that as a paper-based check for somebody to physically come in with their passport or their driving license. Whereas I think COVID's been a great opportunity for people to look at things like digital ID and realise, actually, not only is it quite inexpensive and quite easy to implement, it's actually safer and it's a better customer experience and a better customer outcome. UTB have a great example of that. So UTB have been using Nivo in their mortgage journey for a few months now. And as part of their reaction to COVID, they've now implemented that in bridging. So they've been able to keep their bridging open and using Nivo to authenticate the customer, to use biometrics, to do their ID and V using their passport or their driving license in-app, but also because you can then share documents. So then take away the risk of your customer telling you things over the telephone or emailing you their documents unsecurely in a really bad way, and just actually taking the risk out by using digital.
Yeah. I guess for that, so that sounds really positive. And I guess that's automating your interaction or making it much easier for one of the parties along the mortgage journey. But as you alluded to earlier, the fundamental journey is you have to provide sort of same set of documents to different parties along the way. And I guess when we've spoken to people over the last couple of years, there's kind of a view that there's a grey area there also around, you have to do your due diligence on a customer, be it the broker, the lender, the conveyancer. Are you seeing a push from a regulatory point of view to kind of help open up or enable parties to share and use that prior authentication by a different party later in the journey?
So there's a few things going on. So we've got the regulatory sandbox, which has been great for getting some of these ideas in front of the regulator and for the regulator to get comfortable with them and how they work, and to be able to have legal and risk and banks and different teams of people in all looking at it together and working out how it would work and how it would fit. But there's a few other things going on around reshaping the journey. So there's a government industry working group called the Home Buyers and Sellers Group, who are working out of Westminster. So you've got RICS, so valuers, chartered surveyors, banks, building societies, legal teams, all the different chains in the party, including tech, working out how you would rebuild the journey with all of the data for everything to do with the property and the customer pulled right up to the very front. And the biggest impact on that is actually the kind of post-offer completion bit. So for most customers and most banks, the onboarding and the origination is pretty much there, or will be as people start onboarding the tech. And then you get post-offer, you get into the valuation and conveyancing process, and it falls down because all of that data is back-ended. So the customer ends up with a really bad experience because they find out things after they've got their mortgage offer that would be really helpful for them to know up front. Same for lenders. So the Home Buying and Selling Group are trying to change that journey and work out, how do we work with all of the parties who hold the data? So whether that's land registry, ONS, some of the fintechs who are doing really clever stuff around the valuation and the Internet of Things data that's associated with property around forecasting the value and the risk of that property,
Yeah.
and pulling that right up to the very beginning, so that before you even go and buy a house, as a potential viewer, you can see that data right up front. And if you want to share it with your lender before you even apply for a mortgage, it takes all of the back end risk out. So that, yeah, so hopefully the home buying and selling group's been going for a while now, but the government's involved in that, the housing minister, all of those people are all part of that. So yeah, I don't think it's regulatory pressure so much as more of an acceptance that there are better ways that we could do this.
Okay.
We need some collaboration. And it's relying on a few things being in place. So at the moment, a lot of the local search authorities aren't on a digital platform, or their records aren't in an easy way to access. They're not in a digital format. And obviously the land registry have just started their digital journey and started doing e-signatures and things. So there's some work there for those parties to do to enable the rest of these changes to happen.
I guess you and I have spoken for a number of years around the future of mortgage tech and where we see things going. I think it's fair to say that Atom, your work there was some great stuff there, and that was probably a bit an outlier in the industry, really. And so if you look at the industry as a whole, it's been a little bit behind. But last year did feel like a bit of a tipping point for me, actually, in terms of the background work that lenders have been doing in building APIs and this industry kind of initiatives to plug different systems together and automate data exchange started to feel like it was really building momentum. And I'd written a blog and been speaking about 2020 really being the tipping point for a bigger change in the mortgage sector. So I think you alluded to earlier the COVID-19 situation. It's kind of forced the hand, I guess, for a lot of people around, well, even things like, okay, working from home. It's kind of people had to spin up and make that work in a number of days. Things like AVMs, desktop valuations, things like that. Do you think, I guess one small positive from this would be, do you think that will spur longer lasting change and speed up the speed of adoption of technology in the sector?
Yeah, I think it would have to. There was a really interesting reaction when COVID first came, and you saw lots of different splits. I guess the first thing you saw was different lenders reacted differently depending on how they're funded. So if you are wholesale or securitization funded, you tend to close down because that's the first market that goes. Those markets are quite hard to get liquidity. And then the banks tend to come back faster because they're retail funded, and then the Bank of England opened their new funding scheme. So you see the retail banks came back with products quite quickly, but at the lower end of the risk market, kind of 60-75% LTV, where they were already quite comfortable with things like AVM, automated decisioning, where you needed less manual intervention, and there was more automation in that process. But you're starting to see now, kind of 6-7 weeks in, definitely that more lenders are coming back, but more lenders are saying, yes, we can do AVM up to 80 or up to 85, and we can do it on some products where we wouldn't have done originally. So where we maybe would have always done it on a remortgage, now we will look at it for things like a buy-to-let remortgage or a bridging product or whatever, other secured loans. So yeah, I think it's always been around the comfort factor for operations and for risk on how comfortable they are using that kind of automation, and the proof will be how well the loans that they've written in this period perform, because actually if they perform just as well as they would have done with manual underwriting, a physical valuation, and all other things being equal, why would you not continue to have that level of automation? Because you get a better customer experience, it's actually better operationally, it's more efficient. Like you say, it actually drives a lot of cost out of the process. So yeah, I think it will drive a lot of thinking, but I'm not even sure that, post-COVID, that we'll go back to, I think Barclays chief exec came out, didn't he, and said that he couldn't see a world where headquarters of 7,000 staff being in the office Monday to Friday, 9 till 5 will be the new norm. So for some people, they're desperate to get back to work. If you're in a shared house or don't have great Wi-Fi, or it's like your home environment isn't conducive to working really well, some people really want to go back to the office. But other people who are like, I've done my job from home just as well as I would have done in the office, and actually I've been more productive, and there's been no kind of bad side of me doing that, they'll probably challenge their employers to say, why do I need to be in the office 5 days a week? So I think we will see a completely new way of working.
Yes, it'll be interesting to see, I guess, and it's amazing how everyone's adapted. I've got 3 young children, and including an 8-month-old, and at the beginning I was thinking, blimey, how am I going to fit in working amongst all this? But somehow you just make it make it work. And I think actually in terms of the added hours I get in a day for not doing 4 hours a day commuting, can be a lot more productive. So it'll be interesting to see, having signed a lease on the office in London last year. Hopefully we'll make use of it in the months to come and moving forward. But I think they're definitely that flexible model, I guess, a bit more of a mix of working home, that could work quite well. I think it's interesting actually, in the immediate few weeks after the situation sort of kicked off, we did see a bit of a difference in how companies were kind of adapting and coping with this. So those that are purely reliant on call centres, and those call centres using quite old technology that couldn't really necessarily even work from home, I think quite struggled a bit with the massive uptick of inquiries around payment holidays, etc. So actually and those that did have digital platforms have started to kind of reap the benefits, I guess. And over the last few weeks, we've seen conversations that had been bubbling away in the backgrounds around, automated self-service and chatbots and things, using this technology to support call centre has really kind of picked up and accelerating. So I think that probably will, I think it's been a big kind of lesson to the sector of, really needs to catch up, because these things anyway might happen, but fundamentally in terms of operational efficiency, digital self-service for the sector, can have a massive impact on efficiency. And I guess I'm an optimist. I think you're one of life's optimists as well, Maria, in terms of technology adoption. So I guess the proof will be in the pudding in the coming months. So in terms of your work with Atom, so you mentioned partnerships earlier. So you had an interesting partnership, Atom, with will.i.am. Do you want to talk us through that briefly? That was a bit of a fun partnership you had.
Will's still there. Anthony Thompson, he's a marketeer by background, and he's doing that marketeer thing where he's like, if Atom was a person, who would it be? Who would you describe? Like, what would you describe Atom as? And his first thought was will.i.am. And it didn't matter how many times he went away and had this different thought process and mind maps and everything, he kept coming back to will.i.am. So he ended up asking his so Anthony's got an agent because he's written some books and stuff. So he asked his agent, if I ever wanted to get in touch with somebody like will.i.am, how would that happen? It turned out that his agent was actually on holiday with will.i.am's agent.
Wow.
So they had this conversation, and he was explaining to will.i.am what we were doing. And Will's backstory is really interesting because he actually grew up in quite a poor area, that you kind of hand to mouth, lived cash environment, and he made it big with the Black Eyed Peas quite early on and made a lot of money really, really quickly, but didn't really know anything about finance. So he told us all this amazing story where he'd been getting all his first lots of royalty checks through, and he'd gone and bought himself this car, and he was out with his friend driving in LA. And he had all of these checks in his glove box, and he wanted to save all this money up to buy his mum a house, just, say thank you for supporting him and everything. And they'd stopped for petrol, and his friend had opened the glove box to go and pay for this petrol and found all of these checks, and had said to will.i.am, you can't have all of these in your glove box, why are they all here? And Will's like, I'm saving them to buy my mum a house. And his friend was like, you have to pay them into a bank, you can't use the checks to buy a house. And Will had no idea, and he was like, for kids like him who grew up, things like financial literacy, understanding how banking works, making banking really accessible and fun in a way that they understand, is like something he's just really passionate about. So him and Anthony had this fantastic conversation. Will then joined the board as a strategic advisor, and Will's got his own tech companies. He does a huge amount of stuff on AI. He's got a lot of voice recognition, voice activation, chatbot type solutions that his company have built that are used in contact centres. So there's some contact centres who do telecoms and mobile phone stuff where their AI and frontline is entirely voice recognition rather than people. He's just really interested in the tech, but he's really interested in the future of tech as well. So he's done quite a lot of stuff with Atom around what future housing might look like, how you interact with your house, how you use your house to be financially wealthy, I guess, financially fit. He's a really fun guy as well. He's been up to Durham. We spent time with the team. He's just a really lovely, down to earth guy, and just not what you'd expect. So he's great to work with. I've got some fab photos of me showing him around the operations centre and explaining to him how it all worked.
What an amazing opportunity.
Yeah.
I guess you touched on there, future of finance, and if we get our crystal ball out and think 5 years into the future, what do you see as the kind of opportunities for the optimum mortgage journey, and what do you think that could look like for consumers?
So I think that 5 years out things are actually starting now with open banking, and I know open banking's not really taken off yet, and we've not seen the adoption, and I'm sure that'll be a bit slowed down with COVID. But I think it's just even the thought process behind open banking and customers having access to their data and being able to share their financial data with third parties who can help them to make decisions, to get financially fit, to understand the impact of what they do. So, if world goes back to normal and you're back in your office in London and you go back to spending 25 quid, 30 quid a week in Starbucks or Costa or whatever, having the tools in your hand that help you to understand the impact of those decisions and to help you realize, like, what are your financial ambitions? Is it to save up and buy a house? Is it to clear your student debt? Is it just to be financially independent? So I think open banking is actually quite a big key to unlock a lot of that stuff with the third parties who are providing them the tools and the customer engagement and the interfaces. So I think if I fast forwarded 5 years, I would like to see a world where for the customer they could see all of their financial health in one place. That actually it doesn't matter who your provider is, it doesn't matter, like almost like deconstruct everything, so you take all of these silos of where your money comes in and goes out away, and that actually what you get is a really fluid picture of your finance, and that the size of your financial bubble kind of grows and contracts as you need it to with your life, because you've bought a house or you've had kids or you've changed jobs or you want to take 6 months out and travel, and actually your finances become really flexible and fit around what you need, and you can pull in all of these different options and third parties and products as and when you need them. So I think we'll see a world where actually finance just becomes really, really fluid and customers are really engaged, like in a real time, all of the time basis with their finances, and make the money work for them.
Yeah. So I guess if you think about, in terms of how open banking can help that journey, not having to give paper-based statements is obviously a big win for consumers. And I guess from a lender perspective, getting kind of more access to a lot more data. Do you think that you'd move to a world where you almost have kind of sort of hyper-personalized decisions made? So instead of being based on groups of sort of personas and groups of products, you'd have much more kind of big data driven, really hyper-personal decisions made about the product as well that's right for this consumer.
Yeah, and big data is completely untapped, I think, for banking, but especially in mortgage right now. We've always had big data for things like actuarial tables and for managing risk, but in cohorts. So like you say, it's very much like people like you, yes, in this credit band, in this type of profession, with this type of household makeup, you are likely to do this, and it's quite a broad range of people. So yeah, I do think you'll get to a point where your own data, not just your financial data and your bank statements, but just your actual lifestyle data, your spending patterns, where you go to eat, where you live, where you spend your money, where you socialize, like all of those kind of things, like your attitude to risk, how much you save, all of that kind of stuff will become very unique to you. It'll almost become like your fingerprint of what kind of customer you are. And if you get to the point where open banking and that fluid of finance does work and does come to fruition, you get to a point where actually product providers are coming to you and offering you a service or a product that you need at the point that you need it and on a price point that's right for you. I think we will get to a point where you'll have not just individual products, but individual pricing. And that's a really big change for the regulator to move away from customer goes to find a product and can choose on a really comparable basis, to actually having an offer which is absolutely unique to you, but is built on your own DNA and built on your own financial fingerprint. And how do you prove then that the customer got the right product? So it's a lot to be worked out there in terms of regulation and risk. But I think we'll get to a point where you get very highly personalised products and pricing.
I guess you kind of alluded to earlier that the mortgage journey itself, there's kind of obvious stuff, I guess, that needs to happen early on around digital ID and plugging open banking and etc. And you guys at Atom, you've got that application to journey down to 14 seconds for some cases. But if you look at the life cycle of a mortgage, it's there's big bottlenecks around conveyancing, and that's typically where the journey kind of starts to fall down a bit and become a bit longer. So I guess other things that are happening in the sector, there was a push, was it 10 years ago, with having home information packs? Do you remember those? And that I think that fell over after a couple of years, but the idea of putting, so when you're looking at houses, having kind of access to that data at the beginning so you can make kind of informed decisions. But I guess from a technology point of view, a lot of data is now available about properties up front. Do you think that could be used much earlier in the journey, actually, to speed up that whole experience?
Yeah, could be and should be. Not even just the property data. So there's property data, there's market data, but also the customer data. So even I don't know how long you've lived in your house and how many times you've remortgaged. Even though you've been through that process so many times, every time you do it, you have to start again, and you have to go and get. You have to provide all of the same data about yourself. You have to go and find a load of stuff about your house, from the bottom drawer of your study or wherever you keep your paperwork. You have to have some kind of risk-based assessment on your property. And that's kind of crazy, because it's not just that the customer has that experience the first time, it's that it's perpetual. We've made it so that every time you remortgage or product transfer or borrow more money or want to pay some money back, you have to go through this like really onerous process. So yeah, I think I would like to see the data not just brought up to the front, but also given to the customer. I would really like the customer to have absolute control of all of the data about their property, about the risk associated with their property, around what's happening in their local area, land searches, all of that kind of stuff. And that when the customer wants to do something with their finances, they choose to share it, that they share it with whatever provider, whatever product provider they want to, and that they're not having to go through this same thing every single time. But for that to happen, you need some kind of secure wallet, some kind of property logbook, whether that's distributed ledger or something, where the customer is able to access all of that, but to have it in a really safe environment where they're protected. But also in a way that's easy for them to then connect that data to other people in a really safe way. So, some of the proof of concepts that have been done with the likes of Codejute, who are using our three-quarter platform, and they did a really, really cool proof of concept last year. And they've done something with the land registry and stuff as well. It's all available online. And yeah, I think the first one who cracks that and just makes it so safe and so secure for the customer and trusted, so that it can be trusted between the customer, their intermediary, the lender, any other third party in that chain. I think that'll be the point where the whole journey pivots.
Yeah. I'm interested. There was a fair amount of excitement also around blockchain and distributed ledgers a few years ago. And we actually built a proof of concept mortgage journey on Ethereum. But I guess when we looked at that, the amount of parties that would have to agree how this works along the journey wasn't necessarily a technology barrier, but it's around kind of curation of an industry around sort of coalescing around using this technology. Are you seeing anything, in terms of the hype curve of blockchain? Everyone's super excited. Then often what happens is people, in the general market will forget about it, but in the background you've got, the real work kind of starting up and real products and services being delivered. Are you seeing anything in the market at the moment happening around blockchain and that sort of technology?
Yeah, so the Codejute proof of concept and pilot was definitely exciting, and had some really big tier one banks involved, valuers, conveyancers, customers, so all of the different value chain. That was really, really exciting and really interesting. So there's definitely some thinking going on there. I think if you get to the point where you get, 2 or 3 of the big banks, the kind of big 6, start using it, it becomes more kind of acceptable and there's more awareness around it then for the rest of the banks to feel comfortable that there's some credibility to it. So there was some IBM have done some really interesting stuff on blockchain as well. So they use blockchain a lot in some other industries around logistics, food, transportation, that kind of stuff. And you can completely see the comparisons between those products and buying a house, because actually it's just different data, but the journey is exactly the same. So IBM have taken a really different approach, where they did their purchase of Red Hat so that they can start being more open and being able to integrate to other third parties, but also having this kind of marketplace approach where I think it was this week Thought Machine announced they were one of the partners who are now in IBM's marketplace. So if a bank wanted to go and completely re-platform, and they use IBM's cloud and IBM's blockchain to do it. But what they can do is have all of these choice of other third parties that they can use for their service and platform or for their customer engagement channel. Or so that whole distributed ledger thing, as well as just having the technology, is also about changing the thought process, that it's not actually just about taking out a core banking platform and putting distributed ledger in. It's actually, how do you make something like distributed ledger work with all of your platforms or all of your other systems and processes and procedures and customer journeys, and use it to make them better and to put the customer at the heart of what you're doing. Because that's what blockchain essentially does, is it gives the customer control and gives the customer something that let's say safe and secure and really shareable. So yeah, I think there's a lot of mileage to go with distributed ledger, where we haven't even started kind of seeing what it could do and what the benefits would be. And there's still a lot of skepticism as well about whether or not it's great technology trying to find a use case. Whereas actually I think the use case is pretty clear, because using distributed ledger would fix a lot of the stuff we just talked about where data sits and how data gets shared, and customers not having to provide ID and V 4 times or every time they want to remortgage. So yeah, I think distributed ledger's got a long way to go in the industry. I know you and I have had the API conversation before as well. So obviously I'm a big fan of APIs. It's the thing that makes Atom instant and real time and provides this really great experience. But I find our industry's approach to API just really baffling. So not only do we have a big spaghetti junction of legacy systems, third-party plugins, manual handoffs from one provider to another provider, we're then using APIs on top of that to create a whole new spaghetti junction without undoing the old one first. And the industry's lack of collaboration just drives me absolutely potty. So we've got individual banks connecting their API to individual mortgage broker CRM systems, or through people like 27 Tech and Knowledge Bank, who've been amazing during COVID, by the way, adapting and giving brokers data and insight into what's happening. They've done a phenomenal job. But what you're ending up with then is, 170 lenders, banks, building societies and lenders, 10,000 intermediaries, all on different systems, all individually plugging APIs into each other, instead of the industry sitting down and coming up with an API strategy and an API solution where we can build, a bit like open banking, where we can build one set of credentials. We all agree data, we all agree what the data points and the naming of the conventions and all of that are, and the security. And we all, have choice, but have a solution that's a bit neater than what we're doing now. I think blockchain will help us undo some of this. I think we're actually just creating a monster right now.
Right, interesting. Yeah, I guess that's the challenge, that people kind of working through challenges around legacy platforms, and there's immediate business needs, and of course, at board level, they're going to be asking, if we invest in this, when are we going to get an ROI on this? And often brokers are still going to give business at the moment based on rates. So it takes people to take a bit more of a longer term view and thinking, okay, as a sector, there are those that are going to innovate and quite radically transform and deliver a better experience faster to brokers, to consumers. And that will become a key differentiator in future, in addition to price. So yeah, I think it's some interesting years ahead in the sector, but good that these kind of the first steps are starting to happen, I guess. So it actually dovetails nicely onto your current work then. So you left Atom, was it the last year, to become you're an independent consultant now, and you work with financial companies, and I think you're a non-exec as well for some banks. Do you want to give us an overview of what you're up to now?
Yeah, so leaving Atom was a really big decision. It was really tough to do, but there was so many other third parties and lenders and stuff out there who want to do this and have a real desire to do it. But if you're not, the tech landscape is really complicated, and there's so many options, and like you say, knowing which horse to back is a really big decision. And the days of doing a project where you would go to your board and say, we want to put a new platform in, and the expectation was, it would be in for 5 or 10 years, and you had 5 or 10 years for it to pay for itself. Like, those days are gone. In even the digital brokers and the neobanks, who are kind of 5 years in now, are realising they've got legacy, because
Yeah.
anything that you built 5 years ago is now out of date already, and it goes out of date so quickly. So the reason I went self-employed and the reason I left Atom is because there were all of these firms who were like, we really, really need help with this stuff. We need help to navigate it, but we also don't know what it is that we need. Do we do a really big scale digital transformation now and just upend everything, knowing that in 5 years' time the world's going to look really different? Or do we go through and find bits of things that we can automate, or bits of things that we can fix, and just improve the journey using what we've got, while we wait and see what happens with things like blockchain and distributed ledger, and whether or not the home buying and selling journey actually does get turned on its head and we have to rewrite everything anyway. So yeah, there was a huge opportunity just to go and help people to think this through, to ask the right questions. So I've been doing this since October. I've had, and it's great because I get to work with some really, really interesting bits of the market, from 27 Tech doing product search right at the very beginning of the intermediary journey. I did some really nice work with like Coracle and Brightstar around how they engage with customers, how they package for other intermediaries, all of the different touch points, what systems they use, whether or not API is the right thing for them and how they would do that. Through to some lenders and building societies who are looking at mortgage onboarding, managing their book, that kind of stuff, and then right through to home buying and selling group, and doing some stuff on things like digital payments and working with the Bank of England on what the future of completion might look like. And then I sit on the board of United Trust Bank, which is my first kind of official non-exec role, independent led, which is cool. They're such a lovely bank to work with, and they're a specialist bank, and my background's not specialist. So it's been great to bring a retail focus to that, where they've all got amazing experience in investment banking and commercial banking and stuff, which is quite new for me. Whereas I come from a very retail focus. So yeah, it's been absolutely brilliant. So I've got some really lovely things that I'm working on right now. I get to have amazing conversations. But the biggest thing I think that I found everywhere I've been is around mindset and culture. So when you were talking earlier about some of the legacy banks and the issues that they have, so like RBS, NatWest closing both last week was like a really good example of this, where that whole mentality around tech for tech's sake, and having this kind of field of dreams approach, that you build something really good, you build really, really good tech, and people will just come. And I think Bo's a great example of, that doesn't work. Customers won't just come because you've got great tech. And where you work with the likes of, Starling and Monzo, who completely understand an Atom that actually it's about your DNA, and the technology is a reflection of who you are as an organisation, and it has to be around your strategy and your brand and your approach to customers and your product design, and everything all have to be aligned. And your technology is just a reflection of that, because the tech's just tech, it's just the enabler. It's not actually, shouldn't be a thing in its own right, tech for tech's sake. So a lot of the conversations that I have now are around, is it tech that you need, or actually are you just following the crowd? We've got a lot of sheep mentality in the industry, like all these other people are doing something, therefore we should all go and do it too, like APIs. Or actually, what is it that you're trying to fix? What is the thing that's really important to you? And do you have to build that tech yourself, or actually do you just go and partner with people who do this really, really well, and then you benefit from all of the research and development and other stuff that they do? So spend a lot of time talking about partnerships, about connecting people to the right solutions, but also introducing them to other tech firms who can actually do bits of what they're thinking they should do themselves and they don't need to.
Mindset there as well. And one of the things also related to that, I guess, is around process of how they build and design digital products. And it still amazes me just how many kind of lenders and brokers and others in the sector that still don't do user testing as part of their process. So you mentioned earlier you work at Atom. I think you said that you tested in the lab with brokers early on before you design a product. So often the first thing we do actually is do a bit of an audit and look at, okay, if you test your user experience with real customers, be they brokers or borrowers, in a lab, in a kind of controlled environment, it can be quite an eye-opener often, and can be quite a good way of building sort of momentum for change. Is there, as an end point, is there any kind of advice you'd give to any incumbents that are listening in now, that are quite early on that journey of how they would start considering how they'd approach their digital transformation?
Yeah, so the thing that always amazes me when I go into firms for the first time is like people are so well documented in our industry because it is high regulated and it's a complex product. So you go in and you find people have all this amazing documentation around policy, procedures, systems, contingency. In COVID, again, COVID's kind of thrown that up because contingency planning was always around having a disaster recovery site and people all going to disaster recovery straight out the window. But when you go in and you ask them, where's your customer journey? Show me the customer journey. Show me the journey that the customer goes through. Most people don't have that mapped out. So the first thing that I would always say to any company I go into is map out your customer journey. Even if you have to do it in little bite-sized chunks while you get used to the process, but map out all of your touch points in the process right from the very first interaction. Where are all of the engagement points? Where are all of the comms points? Even if you don't actually send a comm, but where are your gaps? Where are the pain points? Where are you doing a swivel chair process and handing something off to another system or another person? Where have you got a manual intervention? Where are your time bandits? Like, where does something take 3 days where you're like, why can that not happen in like straight away?
Yeah.
And if you map out your customer journey, whether you're going to do a really big scale transformation or whether you actually just want to pick a couple of pain points and fix them, having your existing customer journey will either help you draw what your new journey looks like and therefore drive your tech decisions around what you need to make that happen, or take all of those things that you've learned from mapping out your journey and prioritize them around whatever's important to you. So whether that's you want a better customer experience, or you want increased efficiency, or you want to just take a lot of manual time and process out, whatever it is, prioritize it by whatever means work for you and start picking them off one by one. And it's amazing how quickly when you do that, you start to get momentum and you get this really feel good factor as like stuff starts happening and stuff starts getting better, and you don't always have to go in and do big change. Actually, sometimes fixing a load of what feel like quite small things have a really big impact.
I think showing that early success as well, it kind of naturally builds momentum, doesn't it? As well, which is really positive. Good. Well, that's a really good piece of positive advice to end, I guess, for today. So thanks again for your time, Maria. Hopefully in the next few months we can finally catch up in person, grab lunch or similar, and it'd be great to hear what you're up to in the coming months.
Yeah, likewise. Thank you. It was really good today. It was good to do this. And yeah, stay safe, everyone.
Cool. Take care. Bye-bye.
Bye.